Despite significant volatility, we've seen markets rebound and we've seen the economy start to rebound as well in certain areas. So now let's pause. It's halftime. We're halfway through the year. Let's take a look back at where we've been and maybe look forward to where we think we might be going on this halftime report of the Video Market Update. Well, we all know that the beginning of the year started, at least in the stock market, started off fairly well. And we saw fairly consistent and decent returns until about the end of February when we started to hear rumblings about tariffs. Then fast forward to Liberation Day and you saw a huge decline in the market. And where was once green was now significantly red, with large drops in the Dow Jones Industrial Average, the NASDAQ, and the Standard & Poor's or the S&P 500. There was much concern and much worry about economic uncertainty, but what we saw is a resilient stock market and a resilient economy. And now as we look at the end of June at the returns of all three major indices, you can see positive returns, all somewhere within about the 4 to 5% range on these three indexes. You've seen international stocks do really well in the first half of the year, and gold, as measured by an exchange traded fund, has been up over 20%. But there have been individual losers. Tesla and Apple are both down for the first half of the year, down about 16%, and United Health, the health insurance company, down about 40%. So certainly winners and losers. When we look at the GDP growth, gross domestic product, we were negative in the first quarter by 0.5%. But the Atlanta Federal Reserve is anticipating that Q2 results, which have not come in, will be closer to about 2.6%. So good to see the economy starting to grow again. We've seen the job market soften, but stable. And we've seen unemployment numbers kind of hang around where they've been the last few years. So that's where we've been the first half of the year. Where are we looking for the second half of the year? I think the anticipation is that at some point in the second half of the year, the Federal Reserve will cut interest rates. There's some expectation that it will be between 1 or 2 cuts before the year is over. A lot of that is contingent on inflation, which continues to come down, but with the uncertainty of tariffs and now new 90-day restrictions or 90-day windows for deals to be done, there's concern that inflation may go up as tariff goes up and interest rates may not be cut. The other thing we're looking for is corporate earnings. Corporate earnings have been relatively strong. We're looking for that to continue through the end of the year. And although we're excited to be up 5% for the year because of the huge declines we saw in the spring, we're looking to still add to returns on the three major indexes to get to double-digit returns, which I think, barring something unforeseen, I think is quite possible. I think as we see some stability in the Middle East, I think that will help with gas prices. I think that will concern global fears. I think you'll still see a shift where the rivers of capital, which have flowed into the U.S. for the last my entire life, are starting to flow out of the U.S. and go international. I think as tariffs are resolved, I think those flows reverse and a lot more of that money will come back to the U.S. So it was a wild first half of the year. There were some really good highs and some really scary lows, but I think we're in a good place now and we'll look forward optimistically to Q3 and Q4 this year. If you have any questions on this video or anything you're seeing in the market or the economy, let me know. But if not, as always, I hope you make it a great week.